Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. Today's income pick, Outfront Media Inc., traded on New York Stock Exchange under symbol OUT, is a real estate investment trust, or REIT for short, that has faced the same kind of headwinds that other REITs have, in particular on rising interest rate. As we have talked about in these videos before, higher interest rates make it more expensive to borrow and service debt. But due to the unique niche market Outfront serves, which is mobile and outdoor advertising, its underlying fundamentals were upended even further during the pandemic. After all, the quarantine orders and the shuttering of businesses put a big dent in outdoor and mobile advertising. With economic effects of the pandemic in the rearview mirror, lower interest rates, and fear of recession fading, the outlook for Outfront Media is looking up. In fact, a decrease in inflation and soft landing for the US economy is expected to boost retail sales. John?
Yeah, Dak, in 2024, US GDP is forecast to come in at around 1.5%. The inflation rate is projected to fall to 2.5%. US retail sales are expected to grow 6.5%, and online global sales are expected to expand a much larger 11%. On top of that, when it comes to advertising and connecting with consumers, businesses have moved from direct mail and traditional media models to more out of the home, or OOH, as it's sometimes called, and digital platforms.
All of this, of course, is great news for Outfront Media.
Yeah, New York City-based Outfront Media is a specialty REIT that provides advertising space or displays on out-of-the-home advertising structures and sites in the U.S. Company's inventory consists of billboard displays, which are primarily located on the most heavily traveled highways and roadways, and transit advertising displays operated under exclusive multi-year contracts with municipalities in 50 of the largest metropolitan areas across the country.
And John, I read that it just streamlined its operation with sale of its Canadian business.
Yeah, Outfront Media had a large Canadian presence at one point until recently, but in October it announced it was selling its Canadian business to Bell Media for around $300 million US. Outfront's Canadian business operated at 9,325 total displays and generated revenue of around $92 million. Now, management said the sale of its Canadian business will provide it with additional financial flexibility as it focuses on its US assets.
Its business continues to recover from the health crisis of 2020.
Slowly but surely, with back-to-office policies helping juice advertising campaigns. Revenue for the third quarter inched up to $454.8 million. Third quarter net income slipped to $17 million, or 9 cents per share. Meanwhile, funds from operations came in at $73.4 million, and adjusted funds from operation was $75.7 million. Both those numbers are a bit lower, and those are primarily due to higher interest rate expenses and the impairment of non-real estate assets.
How has that affected its dividends?
Well, the pandemic, as you know, was not kind to many stocks, including Outfront Media. Management actually suspended its 38 cents per share quarterly dividend during the 2020 health crisis, but it reinstated it at a much lower 10 cents per share in the back half of 2021. On the plus side, it actually tripled the payout in early 2022 to 30 cents per share, and it's actually held it there since then. This works out to an annual dividend of $1.20 per share for a pretty high yield of 9.58%. And then the dividend payout, if anyone's wondering, it's actually quite safe, accounting for just 72% of adjusted funds from operation. This means there's room for the company's board to increase the payout if it so chooses. Still waiting for the economy to fully recover might make more sense right now before hiking the payout again.
Outfront stock has been doing well lately.
Yeah, it's been doing quite well since early October, rallying an impressive, I think, 50% during the time the company announced the sale of its Canadian business and reported inline financial results. And then perhaps most importantly, at least for REITs, on November 1st, the Federal Reserve said it was holding its key rate at the range of 5.25 to 5.0%. And perhaps most importantly, at least for REITs, on November 1st, the Federal Reserve held its key lending rate in the range of 5.25% to 5.5%. And analysts expect the Fed to start cutting interest rate mid-year 2024. Now, even with the recent rebound in its shares, Wall Street believes Out shares are seriously undervalued, with a 12-month share price forecast of $14.50 to $18 per share.
John, thank you so much for your insight. Just to recap, Outfront Media is a specialty REIT that operates out-of-the-home billboards and mobile advertising campaigns across the U.S. While its operation took a hit during the health crisis of 2020, The lifting of quarantine orders and back to office policies have been seeing the company's operations rebound. It recently streamlined its operation by divesting itself of its Canadian operation to focus on its US operation in 2024. This move has made Wall Street analysts increasingly bullish on Outfront Media. While buy and hold investors wait for recovery in Outstock, they can sit back and enjoy its inflation-crushing annual dividend, which currently stands at 9.58%. That's it for today, and make sure to go to incomeinvestors.com to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to the incomeinvestors.com in the description below. We'll be back with more videos soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.